Good morning, welcome to Morning Outlook. This is Kim speaking on Thursday the 9th of July. So starting looking at the news, and well, there's not a great deal, well I say not a great deal, there's not many events, but what's there? This morning we've got the Eurogroup meetings that are being held in Brussels. Now this is attended by the President and Finance Ministers, etc. of the Member States. Now this may we may see some sort of resolution from the budgets and the mechanisms they're looking to put into place to help provide a boost following the COVID outbreaks. So hopefully we'll see something from them there. So that's certainly to look out for at 1:30. Now, sorry, I say that's something to look out for. It occurs during the day, so it is a bit hit and miss in terms of when the speakers will be speaking. So aside of that, then we've got at 1:30. We've got something we can look at is the U.S. unemployment claims. Now, this is a weekly number. Normally, I ignore it because it creates very little volatility, but in the current state of things, we may see some volatility around that. So it's at 1:30. Okay, looking then at the technicals, and what we're seeing here with the euro is a continuation of that sort of push up. We saw it starting off earlier in the week there on Monday, and Tuesday it gave it most of it back. Yesterday it's pushed back up again, and this morning already a little bit of a move up there. We'll see how it goes. I was expecting earlier in the week that we'd get back to these highs, and well, we may do that. Now looking then at the mess there is on the 4 hourlies, and it is a mess, and it's every time we've come up to one of these prior highs, it seems like this one here, it sort of struggled, rolled over, got to the next sort of level here, struggled, rolled back, got to this one. Well, we're not struggling quite so much now. There is some momentum behind the move, and we could see some continuation. It's not the easiest. There's an untouched daily pivot here. If there's a failure to agree on the budget system that they're looking at, maybe we'll see a pull back towards that sort of area. So it's something to watch for, but really it's I'd like a decent retrace to get into a buy. So that's where we sit on the euro. It is already into its daily R1, but it's done quite a bit through the European session relative to what it normally does. The pound's been easing its way gradually. I mean, we've all this week it's been pushing up positively so far, and it's just slow and steady with the pound. And yes, we're having the retracements as we pull into sort of key resistance points, but it's moved slow and steady. Again, it's got a daily pivot, so anything that's not seen so well, or any fear factors, dollar rushes, and we could see the price come back towards that sort of area. Again, it's a little disappointing that we haven't got a nice little retrace to buy off this morning, but that's where we sit at the moment. That's what we really need, maybe back towards the 21. It's not sending any signs of divergence here. It's looking positive at the moment. Dollar yen, my least favourite. It's not really done too much, and it's been the yen's quite a good backup. I mean, we played the pound yen yesterday, and at one stage when the pound itself was rolling off much steeper against the US dollar, the pound dollar, the yen came into because I played the pound yen. The yen was also given away to the dollar, and it sort of overall it saved us from being stopped out. So that does have some benefits, and also does give a boost to your pound trade sometimes. But here on this yen itself, yen dollar yen even, consolidation, a little bit of a chip down there yesterday, ended up sort of a bit more bullish. Now, as I've said recently, I've said that this is one of the sort of more favoured currencies. There is money moving into the yen, bigger money, so it wouldn't be a surprise to see it continue to the downside on a gradual basis. Bit messy where it sits at the moment, and there was a bit of divergence across the lows there. And again, we've got a daily pivot above, which, well, if it starts getting any sort of ride to the upside, that may be a near-term target. But really, I'd rather be selling some of these or selling this thing. Aussie dollar. Now, the Aussie, one of the sort of more from a sentiment point of view, the reports etc. It's reasonably bullish. It's eased up. It's still bullish, and what we're seeing here, it's a bit more difficult to read. It has, coming back to this dailies, has been pushing up, but on a steady rate. It does seem to give a good chunk back before it pushes up for its next go. Still not got up to the sort of levels I expected earlier in the week. We got close to it. Big retrace following that, and it's danced around a little bit, but pushed up yesterday afternoon, and particularly, and well, through the Asian session here a little bit. But it's a bit of a mess where it sits here, and if we start seeing the pound and the euro selling off, this may just sell off a little bit easier as it looks at the moment. And again, daily pivot as a target there. Canadian dollar. Well, the Canadian dollar, the strength of the dollar there, bullish engulfing yesterday on the dailies. And when you look at it, solid old down day there yesterday. Broke. It was looking. It was closed above some areas there, bullish, and closed above its pivot. Its key moving averages, but has rolled over since, and well, as I say, rolled over quite convincingly yesterday. Today, well, again, daily pivot, way away from where it is at the moment, and if we see any dollar buying, well, that could be a target on the way back there. But with a lot of these markets, I'd rather be the other side. I'd rather be short here, long on the pound and euro. That's pretty much it. One thing just to bear in mind for those technical traders that like this sort of thing, if you look at the dailies on the dollar index, we've I saw this somewhere else actually. I can't claim that I spotted this, but there is the bearish crossover here. The 50 crossing the 200 there, bearish crossover, been confirmed last couple of days. Well, apparently, I think it was 8 out of 9 occasions we've seen quite some bearish movement following that. Well, we didn't really need it to show us that. We've already, for the dollar index, it's just as the euro is trying to break out there, the dollar's, oops, didn't mean to do that. I'll move that back if I can. Here we go. So if we see that break of that, we've seen that break of that trend line. It's a bear flag. It's looking bearish, and there's 100 reasons why. Well, perhaps a few less than that, but why the dollar should be weak at the moment. Anyway, there we go. It's softening and continuing to do so. Right, I thought I'd just throw that in. S&Ps. So the S&P's caught the bid a little bit yesterday, not massively. You look at day on day, and it's not much more of a range. Didn't manage to break the previous day's highs, but it's sitting up there. Well, as I said yesterday, we got this sort of bull flaggy sort of pattern sitting across here, and well, may have some more upside. Looks like it may be, but I was looking at the news and reports, and there's not that many coming out this week, but it has started, but not many coming out with it next week. I think maybe we get it next week in proper, but at the moment, well, it's actually almost pulled back to its daily pivot, a bit softer than the currencies we're seeing here, and there is good reason for it to be soft. So I'll leave that for now. The oil price, quickly. Oil's gone a bit sort of all over. Had a good shove back yesterday evening there, but well, it's gone a bit slow and choppy now. We see it on this 4-hourly, just consolidated here a little bit at the moment. Still got the potential to get up to that 41.40 area, but as I say, just slowed up from where it is, from where it's been. So quite slow at the moment, and it's lacking my interest a little bit just at this juncture, but may come back into giving some decent moves. Okay, that's pretty much it for me. I hope you have a great day. Bye for now.